Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, on Monday morning we had a fair bit of support for the markets, and that came about with the progression of these Greek bailout negotiations. Seems to be that the Eurozone parliaments need to just vote these through, and we're sort of moving towards more progress really. But the support was also been helped by an interview that Angela Merkel, the German Chancellor, gave on German TV last night, saying that she felt confident the IMF would be involved. Now, the IMF previously said that it wouldn't be involved unless there were substantial debt write-downs and restructuring. So, could this mean that the Eurozone is malleable on that sort of topic? Remains to be seen. But anyway, still, the markets are also trying to come to terms still with this news last week of the China devaluation and what that actually means for markets going forward. Certainly the impact it has on the US, this China devaluation of about 3% on the yuan came about last week. Now, initially that doesn't sound like a great deal, and it isn't really, but if they do continue to do so, even though they've said they haven't, that they're not going to, and there's no need to depreciate the yuan much further, if they do continue to do so, this could now see the US starting to import deflation, and certainly inflation in the States is hard to come by at the moment still, and that could continue to sort of persuade members of the FOMC not to move on interest rates, and that could therefore push back expectations of what is becoming sort of a 50-50 call perhaps on this September rate hike. So we've got the US inflation this week. Actually, the core CPI could be interesting. No movement is expected on that core CPI number, but we'll wait and see how that means, how that impacts on the dollar. We've also got Fed meeting minutes, so again, a lot going on. But at the end of the week, we've got this big Jackson Hole Economic Symposium that has history, actually has a historic sort of trend for containing key monetary policy sort of hints by the central bank of the Fed. But Janet Yellen isn't actually there this week, but still we'd be looking out for any sort of hints at movements from other FOMC members. So how does that all impact and play out on the Forex markets? Well, you've got euro dollar, which has been sort of is rallied actually on the back of this China yuan devaluation story. The dollar was weaker on the back of that yuan devaluation, and also there was a big position unwinding for euro yuan to play that euro strong card. Now that has impacted on the euro dollar chart, because we've seen the move back above what I'm now seeing as a 50 pip band of pivot level between $1.1050 and $1.11. So the euro is sort of teetering on the brink once again. Neutral technical indicators, so it'll be interesting to see how this pans out. We've also got a neutral outlook on the cable chart. Cable continues to remain stuck under the big resistance of 156.90, not able to break out. It'll be very interesting to see how cable reacts tomorrow. You've got UK inflation, and it'll be very interesting to see if that comes out strongly. Then we could see a push higher, but certainly at the moment, range bound on cable. Similar range bound actually on the dollar yen as well. We had a big sharp reversal on in the middle of last week on the back of this devaluation story, and you've seen a consolidation since then. So dollar consolidating on against euro, against cable, and also against the yen. But also looking at charts such as the Swissy, the Aussie, and the Kiwi. These are all consolidation stories at the moment. So there's very much of a middle of the road feeling for the dollar at the moment. Could tip either way. So watch out for any catalysts we might have this week. So for equity markets, well, the equity markets, the big story remains these commodity prices. Commodity price weakness has a big drag on sentiment in the equity markets. The DAX isn't really exposed to that that story. So it's been outperforming as a general rule in the last few weeks. However, the big drag that the DAX had last week was on the devaluation story, because Germany is a big exporter into China, and that impacted on the likes of, say, BMW, for example. Shares lower there. So we have the DAX, which is now trading between a range, between sort of Fibonacci levels, really, the retracement levels of the big December to April rally. You've got the big level at 10,800 coming in as the support, and the big resistance coming in around about 11,640. For the S&P 500, it's actually in a bit of a symmetrical triangle at the moment. You've got support at 2,068 and coming in for resistance at 2,105. But we're coming towards the end of earnings season, so lack of drivers there. But earnings season has been again typified by the pressure that the energy sectors have been putting on the S&P 500. Also, any international plays complaining of the stronger dollar and the impact that that has on earnings as well. So the earnings season hasn't been great for the States, but now we're moving towards the end of earnings season. The catalysts are not going to be really there, and looking again much more at the international economy to drive the S&P 500 forward, and it could well struggle on the back of that. FTSE 100 also has been in this symmetrical triangle shape trading, and again the big impact has been the commodity sectors. 26% of the FTSE 100 is made up of energy and basic materials plays, and they've been very disappointing in recent weeks, and it continues to dog the FTSE 100. You've got the support that comes in around 6,500 on FTSE within this triangle, but the triangle is under pressure to the downside. So in terms of commodity prices, where are we looking at? Well, we've got the gold price, which had a strong rally on the back of that devaluation story, safe haven trade, but also the potential for Chinese investors to buy into gold, which sort of as opposed to investing in the stock market, which is a very volatile play, very difficult to trade, and also the devaluing yuan as well. So that's why gold has benefited there. Continues to rise. Actually, looks like it's rallying on the gold priced in dollars towards the 1131 bucks area. So that is the big old floor, which turns into the new resistance, and that looks to still be the area at which that rally is going to come back to. The oil price, wow, continues to fall away. That's a big play on China, the slowdown in the economy there, and the lack of demand coming through from China. Big concerns. Big supply as well. Supplies remain at record levels. Certainly OPEC supplying well over the 30 million barrels a day supposed limit that it's got, supposed target. And the oil price continues to fall away. Multi-year lows on WTI, 42 bucks is that multi-year low. Continues to sort of put pressure on that level. So for the rest of the week, what have we got to look forward to? Well, as I said, we've got the UK inflation tomorrow. That's the big data. You've also got a bit of US housing data. You've got the building permits and the housing starts to look out for. On Wednesday, we've got the US inflation data and also the FOMC minutes. FOMC minutes from the latest meeting will be interesting, certainly, but markets looking towards the Jackson Hole Economic Symposium on Thursday, more than likely there. Also on Thursday, we have got to look forward to the Bank of Japan monetary policy, which is could have an interesting angle to it, considering we've had Q2 GDP, which came out negative 0.4% this morning. And Friday, finally, we finish off with the Chinese and the US flash manufacturing PMI data. Big impact potentially on any risk appetite across the board, really. So it'll be very interesting to see how that finishes off the week. So lots to go on again this week. And with that in mind, I wish you good luck in your trading, and I'll speak to you next week. Thank you.